Does anybody actually look and see what's in this CNN Fear Greed Index? Have
Uh,
you ever?
is that public information?
Oh yeah, they put it right there on the website. How many people you think actually take the time to look what's inside?
I actually used to go to CNN. Is it CNN? Is that what you said? Or CNN?
It's CNN Fear
Yeah.
Greed Index.
Yeah, CNN Business used to have like a pretty good like markets like homepage back in the day. I don't know if they still do, but
I used to be a contributor.
Yeah, it had like I used to go there
14 years ago, 15 years ago,
just to see what was happening like overseas. But I haven't been there in a while. I don't know. Let's go look. I haven't been to CNN in a while. No, I don't know what's in that index. To answer your question,
it is criminal.
Well,
Like
here,
legit criminal.
I'm on the page right now. Learn more about the index. Okay. So momentum, breadth, it's all pretty vague stuff.
Momentum, breadth, and price. Is that mean reverting in nature, Spencer? Or is that like the fact that their biggest inputs are momentum,
and call options,
price,
junk there's junk demand, market volatility, safe haven demand, whatever that means.
What that means is that these idiots think that the bond market's supposed to go up when stocks go down. That's what these idiots are telling you there.
Well, that did happen for a long time.
Yeah, and then it stopped, but they didn't do anything about it. They just left it there, hoping nobody noticed. They never met me.
Oh, never mind. It says it all right here. Okay, so safe haven demand is the difference between 20-day stock and bond returns.
Yeah.
Yeah. They got the VIX, put and call options, McClellan, volume summation index.
The VIX and the put call ratios, those make sense. I get that. So that's 2 out of 7. It's 2 out of 7. The fact that they use price, breadth, and momentum as mean reverting and evidence of sentiment shows you how idiotic these people are. And by the way,
125-day moving average. I've never really seen that before.
Yeah, it doesn't matter. It's what the smoothing mechanism is smoothing. That's the problem. It's not the smoothing mechanism itself. And then, by the way, this isn't a political thing. It could be the Breitbart Fear Greed Index or whatever, Newsmax Fear Greed Index or Fox. Yeah, I know how the sensitive Sally's like, they get all their panties in a bunch when you make fun of the preachers at their church, you know how they get. So it doesn't matter who makes it. It's criminal. So if you're ever wondering why none of this makes any sense at all, is because it's designed to not make any sense at all.
July 3rd, we read Extreme Greed on July 3rd. Actually, July 23rd, Extreme Greed. July 23rd. It was the last.
The reason it's telling you it's crazy fear right now is because momentum is high and the stock prices are high and that stock bond thing doesn't make any sense, right? I don't know. Nobody has taken the time to take that out of there because they're literally lying to people. Like be like, hey, maybe we should stop lying to the public and confusing the crap out of your parents' group chats.
This is probably a pretty good barometer of regular person sentiment. Are
you kidding me, Spencer? Stop it! I can't even deal with you. Can we start this show?
What do you mean?
Everybody here is now dumber.
All right, whatever.
Come on, Spencer. You're better than that. You're better than that, Spencer.
All right. Good morning, everybody. Welcome to the morning show. Spencer, JC, Steve is still out gallivanting around St. John. Maybe he'll join us today. I don't know. New guest on the show. I love having new guests on the show. We'll have Adam Turnquist on today. He's the chief technical strategist at LPL Financial, and I love talking to new guests. So, ZZ wants us to stick to the charts. We have charts. Don't worry. We have charts today. Don't you worry about that. Charts will be discussed, but we can talk about other things too. It's fine. So, for example, earnings Maybe Robinhood. Just a thought. Datadog. Just a thought. I don't know. Bumble getting killed this morning.
All right, so tell me about Bumble. Is Bumble the one where the girls have to talk to the guys?
That was the original. I couldn't tell you if that's still how it works, but that was the original thing, the shtick back in the day. Earnings
didn't work out
for the stock now, but that's not unique to them.
I wonder if it's like a science thing. I feel like throughout evolution, I feel like it's the male approaching the female, right? It's not like there's got to be an evolutionary thing there that they're trying to fight, right?
I don't know.
This is a Perlman question. I'm curious about that.
There's a lot of big earnings moves here this morning.
All right,
quite a few.
Tell me.
Well, okay. Well, do we have a Robinhood chart? That's actually not a big move. So it's up only 4%. But it was just a blowout quarter for them. Just
what was so good about it, Spencer?
The numbers were big beats. It was all positive. All the commentary was positive on the conference call. All the headlines are like, this company is doing amazing. Everything's better than expected. And I mean, yeah, look at that chart. It kind of speaks for itself. So they're just firing on all cylinders right now. Was there even a single thing to like critique of from this report? I don't know if there was.
Here, I got a good chart there for you. Throw it up. What are we doing here? Slide 2. We're doing slide 2. Here we go.
It's like Robinhood chart. They're in these prediction markets, and it's just like, I guess it's free money for them, right? So
there's your Fibonacci extension level from the IPO highs down to the lows in 22. You got your extension at 133, and basically the trade is simple. If you're above 133, you're long to 211, right? So that's the next target. It's 211. The trend here is up. If Strazza was here, I'd be asking him if he still thinks that Robinhood is a crypto play. I feel like I was in that camp for a little bit, and I don't know that it is.
Honestly, it's it's several plays wrapped in one.
Right.
It's crypto, it's capital markets, it's gambling. Okay. Like, is this not the best gambling stock? It is.
Wow. I hadn't really thought about that, but yeah, you're probably right.
Go look at the casino stocks. I did this morning. They all suck except for this one. Right.
Yeah, no, that's interesting. It's an interesting point. Yeah, you're probably not wrong.
Yeah.
So it's more the gambling side of the equation versus like the capital market side of the equation. More like listen, it's sleek, it's easy to use. I use it. I mean, I use it for one specific purpose.
Yeah, I use it for one specific purpose as well. I use it.
I only look at it for like overnight trading, and eventually there'll be other sources for that where I don't need it. I won't need it anymore. But that's not the point. Like, I'm a professional. I do this. I have accounts at, real brokerages. I don't need this, but that's not the point. How many people are out there that are not me, right? I'm not the target audience here, right? Far from it, right? So they're crushing. Good for them.
Exactly.
I want to talk about more of the earnings, but let's do a little quick state of the markets and then we'll do it.
All right, fine.
All right, we got Dow futures flat this morning, 47,000, just under 47,500. S&P's up 0.25%, 15 handles, 68.40. Nasdaq 100 up 0.25%, 25,800 and change. 30-year bond futures up 0.33% as interest rates coming down this morning, just under 117 for 30-year bonds. Crude oil up 0.75%, above 60. Yep, above 60. Copper up almost 0.5% on the day, back above 5. That's a big one. Gold up 0.75% back above 4,000. 4,022 for gold. Silver back to 48.5. Silver, I'm insane, hanging in there pretty good. Up almost 4%. With the VIX down, but just under 18. Still relatively high. We got Bitcoin at 103,000, down about 700 points on the day. You got Ethereum just under 3,400, down 1% on the day. Solana 160. Down 1% on the day. Total crypto market cap, Spencer, 3.39. 3.39 trillion.
So how about that price action yesterday? Right? What a difference a day makes. Granted, at this time yesterday we were already off the lows and we've been rallying kind of throughout the morning, right?
You're saying in crypto?
No, just everything. I'm saying everything. I'm saying crypto. I'm saying stocks.
You're surprised? Are you surprised that stocks went up yesterday?
No, not surprised at all. I'm just saying it was like if you're bearish, you have to be wondering like, damn, am I ever gonna get any like follow through whatsoever? Because you get like
but if you're bearish, you know you're fighting a trend and you know you're probably wrong, right? So like if you're bearish, like you might be losing money, but it shouldn't be surprising, right?
Yeah, I just like,
you know what I mean?
I continue to be impressed, with I'm just looking at like I'm talking about the indexes here, but even just the sectors, right? I mean, any down day is met with just almost immediate buying thereafter.
You want to do some technical analysis?
It's quite impressive. I just
you want to do some technical analysis
on.
We can do some technical analysis if you'd like on the S&P 500.
Yeah.
What do you think is the most important index? Is it the S&P 500 or the Dow?
I mean, I like the S&P. I saw that stat from was it Charlie Bilello yesterday that it's never been two stocks have never made up more weightings than right now in the S&P, the top two.
I always laugh at this because people are like, "Oh, it's too high." Well, it's not the fault of the companies that are doing so well. Maybe the other companies should stop sucking so much and maybe try to do a little bit better.
There are things, there are tools that the index companies have at their disposal should they want to curb these weightings. But the S&P is.
But think about what a bad idea it would be to cut your flowers and water your weeds, right?
Mm-hmm. Yeah.
That's how humans want to do it. They see beautiful flowers, they just want to cut them down, and they see these gross weeds, and they're like, "Ooh, let's put some water and some fertilizer over here. Make these weeds just grow so much better."
Yeah, the S&P is what I own the most of all the major indexes. I don't own as the Dow, as we talked about yesterday. Nobody owns the Dow apparently.
Yeah, you do.
S&P is my answer.
You own all the stocks in the Dow if you own the S&P.
Yeah, but not in that order.
Hey, you own more tech.
Yeah, a little bit.
Upside too.
Me and everybody else.
So this is the S&P 500 ETF SPY. Kind of fill in that gap.
Big fan.
Right? Kind of fill in that gap if you want to zoom in there. You can really see what's going on, right? There's that resistance, from 3 weeks ago or so. Kind of sold off. What was that sell-off from October the 10th? What was the excuse they were making up in the media? Was it a Trump thing?
Oh, dude, it could be anything. That was that around the time that I remember there was a headline about 22 states being in a recession. Do you remember that from a few weeks ago?
I mean that's adorable, but I don't think that was it.
It could have been that.
Definitely was not that.
I can't remember back.
Nobody gives a shit about those 22 states.
Hey, my state was in that list.
Nobody cares, Spencer.
All right.
So anyway, whatever it was, I think it was like a Trump thing. I think it was a China Trump thing. I'm not 100% sure. It doesn't even matter. But so sold off, came back, then gapped above that level, and now we're retesting it, right?
Yeah.
So I think there's something here for everybody. So if you are bullish, Colin says it's China tariffs. I think I agree. That was a Friday, right? That was a Friday.
Oh yes, that's right.
Everybody's panties were all in a bunch over the weekend. Remember?
That's right.
So that's resistance, right? So form of resistance. So when we gapped above that, that is the market telling us that demand has been able to absorb that overhead supply and has now been able to move on. So there's more buyers than sellers at that level, at that red arrow. Well, so on the way back, if we know there are more buyers than sellers, then that should act as support. There's more buyers than sellers here. We know from prior experiences. So now let's see. Right? So far, the buyers did step in. So if you're bullish, this is perfectly normal. If you're bearish, what you're looking for is a break back below that red arrow, right? Because that means that the sellers are definitely in control at those prices, right? Right now, they have not proven that to be the case at all.
Yeah.
The buyers have proven to be in control at those prices. We can call it 674, right?
Can I bring on our chief Caribbean correspondent,
Oh,
Steve
we
Strazza?
have one of those now.
Yeah, we do have one of those.
Hey,
Good morning, guys.
what's going on, my man?
You can see and hear me okay?
Unfortunately, we see and hear you perfectly. How are you, sir? Are you enjoying your vacation?
I am. It's been lovely.
Can I tell the folks what I was texting you yesterday?
Yeah, yes, you should.
I was telling Strazza to enjoy it, right? He's down there in the Caribbean, obviously having a hell of a year. But either way, even if it was having a bad year, whatever, it doesn't even matter. You know, he'll be thankful in the future that he did this, that he was out there and he took time away. It's time flies, you know, so, you know, enjoy it and you'll look back on it. You'll appreciate it. I'm telling you.
I try to, you know, time goes by really fast when we're working. And just the other day we were like, God, it's already the holidays. Like, where did the year go? But you look back and you say, where did the past 3 years go? 5 years. So no, it's been good. It's been a relaxing week. Gonna swim with some sea turtles later. Maybe go parasailing.
Strazza loves turtles.
I've really enjoyed the snorkeling.
Do you do the scuba or you just do the above thing?
No, a lot of people in the Keys do, but it's a whole certification process. Like, it's a pain in the ass.
But can't you bang it out in a pool like one afternoon? I'm pretty sure.
And they had one on my road where I lived in Key West, like a giant pool that goes down there. It's like a dive tank. But yeah, you go like a couple days, I think it is, to get it. That probably is worth having if you live around these parts. But I see you outlining some big levels in the major averages.
One average, pretty major. Secondary, in my opinion, but, you know, we'll give it. You know.
Where's your line on Bitcoin?
My line on Bitcoin. You know, Louis been pounding that 104, right?
Yeah.
Right there.
You know, I mean, it's still in a range right here. It's not so much a line. Like where do I get bullish? Maybe back above 110.
You know what? Solana's got to recover for me to feel bullish on the crypto.
Well, I got to tell you, you know, I was looking at a lot of the on-chain data there, and the capitulation and the blowouts taking place, the short-term realized sellers is off the charts, right? Very capitulatory in nature.
In Bitcoin or peers?
Bitcoin.
Yeah. Well,
yep. A lot of capitulation on chain.
We were saying this last month after the volatility into October 17th. I'll say it again. When you get a big shake like this, right, and some downside volatility, sure, everybody wants to say scoop and score, you know, shake out and break out. You got to see it, and you got to see it quickly. Like, typically the best ones, they shake and then they go. Like, shake and go. Like, they'd be going right now, frankly. So every minute, every day that passes, and Bitcoin's not moving higher with momentum, it's not a scoop and score. It's not a shake and bake. It's nothing like that. It's just a completed top.
Let me ask you something, Mr. Strazza.
You.
What do you make of the relentless, unprecedented relative strength out of Iron and Cypher, despite what we've been seeing in crypto? Come on.
In our analyst call yesterday, a bunch of us agreed that might be the juiciest short on the books. Because they just look different. There could be a massive catch down move there from them. They've been the best stocks in the market. They haven't even cooled down.
I sold my Cypher last week or Monday, whenever they came out with their earnings.
I think you got it.
I'm thinking about buying the Iron.
No, I don't know, dude. I think
that thing's making all-time highs with crypto falling apart.
I think of Brian Shannon in these moments. He always says, you gotta remember where they came from. And like this thing,
looking at where they came from.
It's been a long and wild ride higher for Iron.
It's done nothing for almost a month.
No, I hear you. You would call that a short-term coil, absolutely.
You would call it.
No, I would. I'm saying yes, we would for sure. I don't know, man. I think, look, it's spicy. That's the kind of trade I would love to put on when things are
it's
really,
crazy
really
relative
good.
strength. Crazy
Well,
relative strength.
What's spicy about it is because it's like the only stuff that still looks that good in speculative growth, right? So it's like one of those situations
You're
where
such
you
a
build
fucking
list.
liare. That is
No,
not true.
No, not.
Slide 2, please.
Biotech's not speculative growth. Don't
Your
start
Honor,
talking about
Your
biotech.
Honor, order in the court. The
No.
only thing in speculative growth that looks good. Meanwhile, the small cap tech index just closed at an all-time high fucking yesterday. How is that mathematically possible if Iron is the only one that looks good?
I'm Island Steve this week. I'm so chill. I don't even feel like arguing with you about this. You know,
There's nothing to argue. I just proved what you said.
Dude, go and look at the charts. Go look at the individual charts. Go look at quantum.
Because you don't think I did that.
If
you don't think I looked at
you'd
the individual charts, do you know who I am?
There are failed breakouts everywhere.
Have you ever met me?
Growth. Here's what you have to think.
Have you ever been on a phone call with me about technical analysis?
The kind of stock that you're talking to me about getting long? No, this is a good conversation. This is good. IREN, Cypher, right? These are the single best stocks in my speculative growth universe right now. Maybe a handful of others, right? They're on a very short list of stocks that still look absolutely incredible here. So you're then making the bet that they are going to keep looking a lot different from their peers. So it's just harder and harder for me to put on speculative growth trades as more and more of the peers fail breakouts, get messy, complete tops, whatever it may be.
I guess we're looking at different charts, so I'm looking at all of them. I don't know.
I'm not disagreeing that those charts look fantastic, and this one too.
Dude, I can show you 30. I can show you 30 speculative growth charts that look incredible. I could probably show you 50 right now, right here, right now.
I can't.
Oh,
you can't show me 50 speculative growth stocks at new highs because there aren't 50.
Man, is that a challenge?
I have it right here. I'll tell you how many stocks in ARC are making new highs right now. If you want to go down that road, we could do it right here, right now.
Are we really going to do this? Are we really going to do this? What day is this today? Here. All right. What time is it? How long we have? Is Kenny here?
ARC. Here we go.
Yes, he is.
I see one new high in ARC, TER. Do you see? Oh, VCYT. I see two. Are there any more than that? Are there any more than two of the 46 components?
Tesla just closed at an all-time high. It's the biggest component.
When did it close at an all-time high? What are you talking about?
All-time weekly closing high, all-time weekly monthly closing high, all-time quarterly closing high.
All right. So we're obviously talking about daily closes here. A new high.
Okay, so now we're going to split hairs here. So the fact that it made an all-time weekly close means it's not working.
We're not redefining the way we calculate new highs here. Okay. There's two. There are two.
There's not two. There's not two. I've got like 8 of them in my portfolio that are making new all-time highs. Go. Bring in Kenny. Let's get some sanity in here.
Oh, man. All right.
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 problems, and I still kept it 100. Hola. Yeah.
I never thought I'd be welcoming Kenny Glick here and be like, finally, we have somebody who's normal and sane.
It's on my head tombstone. What's
normal and sane.
Yeah. Hey, you know what? Yesterday was real normal and real sane. Yesterday was awesome.
Tell me what was so awesome about it?
It was just ease of use. You know, the Clove trade was actually my favorite in the Hertz. But the reason I love the Clove trade yesterday was that instead of going into a report like we went with some Rambus, we said, no, let's not do that because it doesn't work. Sold the Clove, watched it tank on the earnings, and then bought the dip. And it was one of the best.
Dude, you're always trading the Clove.
I love the stock, just like Hertz, just like Open. If they keep paying me, I will keep going back. And you know what? My dad traded 2 stocks for about 11 years, and that's all he did. And it works because if you get comfortable with the trade and you're in the ebb and flow of it, especially when you're using VWAP, you're going to be on the right side of it. So Hertz, man, that stock is just awesome to trade. Open is going to be a lot of fun tonight. They're reporting. But Clove, cheap and good, like my ladies, baby. So it was a good day. It was a real good day because you could, you know, when you're risking 3 cents on a trade, you could buy yourself 10,000 shares. It's a $300 risk, and the stock goes up 40 or 50, 30 or 40 cents. It's a pretty damn good trade, and hopefully there's some more to go on that. But this morning, eerily quiet. There's not much moving. It's just there's a lot of numbers that came out, but a lot of them have now gapped, and we're just kind of sitting around. Kind of interested in what Snap's going to do. I'm a big fan. I don't know.
They report after the bell.
They reported this morning, I believe, or last night.
What are you a fan of?
I don't know. Something about that. Something about just goofing around on that app. I never hated it, but whatever. But they don't make any money, so I am looking at that one. But I'm still looking to see if the residual sellers are out there. We finally got some volatility in the market, and yesterday was a great day. So I'm looking to maybe give back some of that and stay in this little bullish chop that we're in right now.
Well, all right, give me a couple of names on the move this morning.
Definitely looking at Snap. You know what? I'm looking at Lucid. You mentioned Tesla. The stock just went green. It's on very low volume. They make beautiful cars. They don't make any money. But taking a look at Lucid, and I got to watch Open going into this report. And again, right now I'm shorting the Qs. So again, bear with me. But
all right. So what would the market have to do to invalidate that thesis?
Break the highs of the day. I'm just looking to. I'm going short right this second on this roll here, hopefully, and just using a quick tight stop. But what's also interesting is Datadog. You got to watch this one up monstrously, big one. And then on the flip side, we had Dash. So Dash already got us paid on a little VWAP break there.
Dude, what happened to that thing?
I don't know, but I love it. So, again, faux show, bro, VWAP break. Everybody got paid about 2.
Can you show us what happened there?
Yeah, hang on a second.
There's some people who are new here.
Yeah, sure.
Don't know what a faux show, bro, is.
Oh, you're new here? Hey, let me reintroduce myself.
My name is Ho.
Somebody's always with me. All right, here we go. Let me see. I'm getting technical support here. What's going on? I'll be out of here.
Talking about resistance.
Hey, did you see that video I sent you?
Dude, you were the man.
Always be trading.
We're definitely doing that again.
Yeah, I would love to reenact that with the.
I love how you gave Josh Brown a shout out. I sent it to him.
Oh yeah, that was the prize, right? Yeah.
Yeah.
So here you go. Just briefly, and then I'll get the hell out of your way. Bang, bang, boom. So this is it. I mean, this is our trade. You come in. I don't know. It doesn't matter what you feel about Dash or what they had to say. This thing's getting hammered. And there's your fake out, shake out. There's your little W pattern. Gets to the VWAP, little chop of trepidation, and then one more. And I love this market because it really is. It's like they try to kick everybody out before the move. And, again, if you're buying it coming out of the bottom, or if you just bought the VWAP, the bottom range is your stop. So not a bad trade. You got 4 points here, a couple hundred shares to start your day, $800, and we're ready to rock. And this is basically it. It's kind of like I said, it's a weird, quiet morning. Even though
throw up the Qs. There's
been like 30 or 40 companies that have reported. Here's the Qs, flirting with VWAP.
That's a 1 day VWAP in blue.
Yes. So
2 day VWAP in yellow.
You got it. So I'm looking for it to get from. Well, I'll show you the first one. That's 2 days worth of VWAP. Here's the 1 minute and the 1 day. So basically equal. Right there we had this. Again, this is the overnight. And again, if you guys are trading futures, the Qs are actually live all night too. So there's like 24-hour trading on a lot of these indices and a lot of the big stocks. I don't know what the liquidity is. I don't trade the Qs overnight, but the futures trading, if you guys have,
there's plenty of liquidity for the Qs.
Yeah, here you go. There it is. This is prior day VWAP. There's the VWAP break. And if you guys are trading futures without VWAP, put VWAP on the charts. It's going to keep you on the right side of the trade. And again, the danger zones also. So you see the NQ futures, which are the Qs, are still above the VWAP. So I'd rather see the NQ futures because then you're going down. But right now, I am just very content with a couple of decent ideas this morning. And like I said, it's just really weird, oddly quiet. So we're going to just wait. The trades always find us, and that's the best part about doing this live.
All right.
All right, y'all. I'll see you when I see you.
All right. Is Strazza here before we bring on Adam?
Strazza.
All right, he wanted to see some small caps. All right, we're just gonna go rip right through them quick. We're not gonna debate whether they look good or not. Just take my word for it. They look good. You guys ready? Who's on the charts? Who is that? Rick?
We're ready.
We're ready? All right, rapid fire. Let's go. We're not gonna talk about each of the charts. We're just gonna go right through it. Ready? Scholes, go.
We're talking about speculative growth stocks.
All speculative growth. Go. Keep going.
This is not new highs. These charts aren't making new highs.
Rip right through them. Just rip through them.
I wouldn't buy this piece of shit.
Go.
What are you showing me?
Keep going. Just keep going. Just
Chinese solar energy.
Is that not speculative growthy enough?
This is China. Full truck.
Go ahead. Keep going.
These are all China. And they're not at new highs.
Nobody said that you're high. Said you look great. He said, did you look at the chart? Go. Keep going.
This is just a list of heavily shorted Chinese stocks.
Nope. This was Brazilian actually. Keep going.
I own a shit ton of this Stoneco, though. I love this Stoneco.
J-Frog has an animal in the name of it. You got lift.
Cheap leaps on the Stoneco.
All right, keep going. Leaps. Go.
What are you doing?
Battery.
So
just keep going. Look, I mean, all of these things look great. You know, Planet Labs, it's great.
Is that a new high?
You know, Global Star,
these new highs?
Keep going.
He's trying to go fast, so we can't tell that they're not even close to new highs.
New highs is a loose term.
We're doing something you can press pause anytime you want. This is 2025. I don't know what kind of third world country you live in right now.
Hey, stop for a second. This one looks as good as anything.
Oh no, this one's okay.
Right, check out the Roku. This is on that short list that I'm talking about of ones that do look actually.
Nasdaq Bobby's like garbage stocks. Yeah. So that's what's working. That's what Strazza saying. It's not working.
Well, this one looks good actually.
This one too.
Because you own
this
it.
One's on that list.
No,
too.
I don't own this. I don't own this.
You did not make the point you intended to, but these are some nice charts. Thank you.
I'll keep going. Go to the last one because the last one's the most important one.
God.
What are you doing?
Right? Go to the last one. Keep going.
I don't trust this space right now, though.
Go. Keep going. Look at that.
Sphere is a hot stock. Look out for Sphere.
Murphy, how many did you just put in here?
I put 30 of them.
Sphere.
I said I had 30 of them. There's 30 of them. That's the most important one. Go right there. No, that one.
Put the Sphere in the IRA, man.
You see that? You see that stick? That's a middle finger. You can't tell. You got to zoom in and see the middle finger. That's that stick.
Some call them God candles.
God candle, middle finger,
candles.
Whatever. You can call them all. I've heard of other things too, but we won't go
Why
there.
are people excited about Robinhood this morning? What did I don't understand.
Dude, because it's not a capital markets company anymore. It's a betting company.
I'm sorry, what?
It's bets. It's prediction markets. It's betting. It's all of that.
Who said?
They did. They're making all gobbles of money.
Jesus.
From prediction markets.
They just reported.
Yeah.
The market doesn't even care. It's up nothing.
Oh, it's up a little bit.
It's not up.
Oh, last I checked, it was. But
all-time highs, small cap tech. Not going to apologize for that.
All right. Let's bring on our guest here, Adam Turnquist, the chief technical strategist at LPL Financial. He sent us some charts. They're already on the deck. We're very grateful for that. Let's bring them out.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Adam, how are you, sir?
Hey, good morning. How you guys doing?
Sorry we had to put you through that.
I've actually seen your presentations before, and 30 charts isn't that many. I think when we first met, it was back in Chicago. You did a CMT event, and you probably had 80 or 90 charts.
That sounds about right.
It was good.
No, I appreciate you. Thank you so much for being here. So my man, LPL Financial, you guys have a lot of advisors over there, huh?
Yeah, I think 33,000 or something. Keeps going up. I've been here just over 3 years, and it's certainly been a rocket ship in terms of growth, in terms of our research platform. It's been a lot of fun.
So I mean, it's a lot of advisors need research. A lot of these are like, in my experience, like guys that came over from like Morgan Stanley or some other places and are looking for a more independent sort of, situation, but then they don't get the research that they had before. So this is an important component, right? Am I right? Is that pretty accurate?
Yeah, it's great. There's a lot of technical analysis there of advisors that follow technicals. I was surprised when I came over, just the distribution list that was already in place. So I've been able to grow that, but they need research. And I don't think the traditional research, whether it's, the fundamental single stock, unless you're picking stocks out there, is is really adequate. They need short, concise ideas, macro ideas in the market. And I think that's really why they gravitate a little bit more toward technicals, or a lot of them do at least.
You think that the LPL advisors are much more technically oriented than other advisors at other firms?
I don't know. I don't have a good barometer for that. I worked at another broker dealer. There was definitely very few advisors following technicals there. So I would say there seems to be more interest in it as well. We do a teaching series every year. That was one of our most well-received webinars. We have our weekly webinar as well. That list continues to grow. So I think there's certainly a strong interest, and I think that's just growing industry-wide, right? When you look at some of the trends, and pun intended, I guess, of technical analysis growing and becoming, I would say, more mainstream than maybe 15 years ago, 20 years ago.
Yeah, and in my experience, a lot of the people that, maybe won't admit that they're using technical analysis most definitely do. In many cases, it's not even their fault. They don't even realize it. Like all these momentum models and sector rotation models. The hell do you think that they're doing there, right?
Right.
The S&P 500 is the greatest momentum strategy of all time. It buys more of the best ones
Yeah,
and less
100%.
or none of the worst ones.
Yeah, it's amazing, the closet technicians that are out there. I used to work on the sell side at Piper, and we talk to institutional clients, and they're less likely to admit they are following technicals, I think, in that crowd, some of them. And when the market would sell off, or you'd have these big down days in positions, all of a sudden my Bloomberg would be popping up with the guy that just wouldn't take a meeting and hated technicals, and he's asking for, when is this going to end? Where should I
What's the
consider
level?
buying? And
What's the next
like,
level?
wait a minute, didn't you tell me you don't like technicals, and why are you calling me? So
Yeah, I mean, listen, at the end of the day, even acknowledging that the volatility index exists is by definition technical analysis, because the VIX is a study of the implied volatility of the S&P 500, which is all price based, right? It's
Yeah.
literally. So just even acknowledging that there is a VIX is in and of itself. When you talk about seasonality, this time of year, there's all that's technical analysis.
Right. And I think a lot of what's embedded into quantitative analysis is just simply grounded in the foundation of technicals as well. Think about momentum. All of the PhDs that are at prestigious schools talk about momentum. They publish their white paper, but that's been around for a long time. It predates some of the momentum, the famous papers in the 90s. It's been used by technicians for hundreds of years, I would say.
Yeah. All right. Well, you brought some charts. Love it.
Yeah. Figured we dive into a few. I kept it relatively brief, but starting big picture, S&P 500. I think there's a lot of people trying to call the top in this market for a variety of reasons. Maybe it's breadth, maybe it's overbought, maybe it's concentration risk. It doesn't really matter, right? The trend is up. And when you look at just the recent price action, we've been climbing in this rising price channel. I guess technically there's an island reversal there, but it's in the context of an uptrend. Maybe worst case, you get back down to the low end of that rising price channel near the 50-day moving average. I think if you start breaking that, maybe there's risk for some further downside. To what level? Maybe the February high, 6,200, but that's a long ways from current levels, and there's a lot of support below the market right now before you get there. I think the topic of the day or month or really year has been market breadth. It's narrow. You have 55% of stocks above their 200-day. I could go on and on about market breadth stats, but at the end of the day,
yeah, but average on a bull market is 60, 70%. You got 60% of stocks in the New York Stock Exchange above their 200-day. It's pretty normal for a bull market, right?
Right, and we live in a weighted world, right? You think about the Mag 7. That's 35% of the S&P 500. So, yeah, 55% of stocks above their 200-day is lower than it was in some of the rallies of 2024 or even earlier this year. But if you just use the simple definition of a trend, price above a 200-day, over half the index is in an uptrend, right? I mean, that's not exactly bearish, I would say. And the other thing is these divergences between price moving higher and breadth deviating or not keeping up the rally, they can persist for meaningful periods. And just because you have maybe a little bit of a deterioration in market breadth doesn't mean it can't improve. We'll look for a potential rotation as we go into year end. I think where that rotation goes could be telling, at least if it goes back into more cyclical areas. Financials have struggled recently a little bit on a relative basis. So watching that sector, but overall, still cyclical leadership, still in a bull market. I think when you look at price action, buying dips versus selling rips here is certainly our view.
Can we get to the Magnificent Seven chart that you brought here?
Yeah.
This
is the equal weight. So we're not weighting the Mag 7 components have an equal weight. And it's really hard to get too bearish on the market when I look at this chart. It's a little bit, what is it, 3-year chart, but it's really just starting to break out. Yes, there's been, I can't even call that a pullback. It's hard to even see the little squiggle on the top right. On a relative basis, you stack up the Mag 7 versus the equal weight S&P 500, and that's just breaking out as well. So in this year-long consolidation range, now we're seeing a resumption of that longer-term trend. So for me, I think this is telling us expect for further upside in the Mag 7, and also expect leadership to continue in this space for the broader market.
Yeah, you could see what you're talking about there in the year-to-date performance, right?
Yeah,
so
and
chart there.
Yeah, exactly. And I think too many people are benchmarking some of this tech rally off the April lows, right? They're saying, well, tech or NVIDIA or semiconductors or whatever, some of these names are up 40, 50% off those April lows, but they're forgetting that they were down 40 or 50% in some of these tech names. So they recovered. Now they're just really breaking out, some of them above their 2024 summer high. So usually when you get those consolidation phases, it's kind of the starting point for the next leg higher versus the end of some type of meaningful rally. And here you can see that the performance as well. This is a few different indices that we're providing. The darkest one, the S&P 500, just year to date. And then we break it down by the blue, that's the Mag 7, up 25% on the year. So outperforming by 10% on the year, that's not really that abnormal. And it's really just been, most of the rally has just been this catch-up rally coming off the lows of April. You can see how it significantly underperformed. I would call the April through, call it July, August period, really just a period of catching up to the broader market. And now you're seeing the acceleration and the outperformance.
Yeah, because those things started to underperform last summer of 24.
Right. Yeah, that was
that was like the end of like 3 quarters of underperformance. Like that was that end. And then as you're saying, then the catch up, right?
Yeah, it was amazing how much we talked about tech and NVIDIA for a year, but yet they weren't doing anything in terms of relative performance, just sideways. There's so many other opportunities. But
Adam, it's just hilarious because when these big companies aren't working, they're like, oh my God, but these are the companies that people own. And JC, nobody cares about your transportation stocks and blah, 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 right? And then when they're outperforming everything else, be like, oh, well, they can't, they're just outperforming everything else. It's only 7 stocks. Like, I think people just like the bitch.
Yeah, I think so. There's certainly there's some validity.
Talk to me about this CapEx chart here. This is something that I don't follow at all. So this is interesting.
I threw this in there. I thought it was an interesting chart because I think there's everyone's trying to call this bubble in AI and the spend. Of course, I have no idea what inning we're in. I'm not going to make a call that the bubble's here or it's going to end anytime soon. I'll let technicals dictate that. But when you take the hyperscalers, they're the Amazon, Google, Meta, and Microsoft, the 4 main ones, and you look at their CapEx spending and you stack it up against their revenue, it's basically parabolic over the last few quarters. It's about 25% of their revenue is spent on CapEx. And what I thought was interesting and why I threw it in here is just because that CapEx spending is now being supported by more and more debt. You've seen the headlines, whether that's Meta doing a huge debt offering, Alphabet did one just recently, or I think this week. So they're ramping up debt. And when you bring on more risk to the balance sheet, there's probably going to be more scrutiny. We saw that, of course, with Meta last week selling off. So I do think as we look ahead for this AI trade, there's probably going to be some maybe more volatility around earnings and just what the consensus is on return on investment in some of this spend. But when you go back to the technicals, you look at the Mag 7, you look at each name within the Mag 7, and again, it's really, I think, too early to get too bearish on the broader market as well.
I love that in the next chart you're talking about healthcare.
Yeah,
I've been on this. Healthcare's got like this defensive tilt, but it's a massive component of the major indexes, S&P and the Dow. So,
Yeah.
I have a hard time calling it so defensive. It's part of the American market, whether you like it or not, right? So,
Right.
this rotation has really been interesting.
Very interesting. And I think for portfolio managers that follow a benchmark, like you have to own something in healthcare, right? Because of its weighting. That's certainly our case with
Yeah.
the models and
Good
portfolios
point.
we manage.
Great point.
And it's the same thing with tech and some of these other sectors. So you can't just ignore it. Yeah, if you look longer term, it's a consolidation phase, we'll call it. But I think it looks really interesting right now. You have this double bottom. You finally reverse this downtrend. You're really not far from punching through new highs. And then on a relative basis, it hasn't made a new low, which I guess it's a win for healthcare in a bull market that continues to print new highs. So it's holding there. And I think one of the other factors that's really stood out is the improving breadth within the sector. We're talking year-to-date high percentages of stocks above their 200-day moving average at a time when all the other breadth metrics across several other sectors are declining. So that rotation, I think, is really becoming apparent underneath the surface. You can see that in breadth. You can see it in the equal weight. I think I have the equal weight in here.
Yeah, throw up the equal weight.
I mean, this chart is, I think, maybe the chart of the week. Maybe it's the chart of next week or the month. But this is a big inflection point here. This is healthcare on trial, we'll call it. We've had this double bottom. We're right back to the 200-day moving average. It looks very similar to these other retests of the 200-day. You can see going back to 2023. I think if you get the breakout here, you probably want to be thinking about healthcare as a potential overweight and some components within healthcare, or using that as your proxy for your healthcare exposure.
It's interesting because you've got healthcare. So you got like J&J, United Health, like Merck, Lilly. You got like those. And then you got biotechs, which have nothing to do with any of those, right? It's almost like it's like its own thing, right?
Oh, totally.
And you're seeing a ton. If you looked at my portfolio over the last couple of months, like you'd think that I had a lab coat hanging, like I don't know anything about science.
Well, you don't need to know that much when you follow the trends and you look at
right. The less I know, the better, Adam. You know what I'm saying?
All right. I mean, we can pretend we know about the phase 3 trials and some of the chemistry and science behind it, but I'll stick to my lane of looking at the charts and trying to make our clients money.
Could you imagine having to read like phase 3 trials? Oh, it sounds terrible.
No, it's another language. You think the jargon around the stock market and technicals are bad. Go into the biotech, especially some of the preclinical stuff. It's
because you're dealing with people's lives. So this is next level.
Yeah. No, thanks. They do a good job though. But look at the biotech index.
God bless them. I'm rooting for them.
I always thought for years that biotech was really just kind of a trade. You buy it at the lows here and then you sell it because it's never really trended well. But things started to change. I was surprised that we actually cleared the 2024 highs here. We've distanced ourselves. I think it's really going to be interesting when we get back to the 2021 highs, how this works out. Do we break through? Certainly the momentum's there. I think the macro environment is probably going to be there. You have rates holding pretty steadily at lows here. The 10-year, call it just about 4%. I think the fact that the Fed is likely going to continue cutting caps, upside risk, and rates, that's important for biotech because they leverage the fixed income market to fund basically non-profitable businesses until they actually launch their products. So that's been a big factor, I think, behind biotech. I think that catalyst is still in play, but certainly like this space, some of the genomic areas are really interesting when you think of it as more of an AI play. They're using basically AI technology to go through all of this data and find different markers and identify potential cancer screens. It's really a fascinating spot. And I think I would say probably early innings when you look at some of the genomic areas, they've been absolutely beaten up and they're starting to show early signs of a bottom here. There's more interest, I think, when you look at some of the volumes as well flowing into that space.
The short interest in the genomics and in the biotechs have been off the charts.
Yeah.
Like they really hate these things, which brings a smile to my face, right?
Exactly.
More, right?
They're
getting crushed. Right? These short sellers are getting smoked.
Right, and you had the FDA come out and basically say we need to fast track some of these approvals and make it easier for these drugs to get through the FDA pipeline. That was just last week, and you had some pretty big responses. So maybe a change in tone in Washington would be another catalyst for next year for that space.
You could tell, Adam, that you're formally trained at this, right? You're not just some, Johnny come lately. Like, you know your stuff, and you could tell by the types of charts that you brought in. So I just want to give you your shout out there. But,
Nice.
The next series of charts here with the dollar, to me, that's where you stole my heart. That's where,
This is another maybe chart of the week, chart of next week.
Yeah, no doubt.
I mean,
no
this
doubt.
dollar, we have a investment committee at LPL, and a group of us decide our allocation for what we manage in research. And we spend a lot of time talking about the dollar, and it's kind of been like watching paint dry. Our head of macros are like, well, where's the dollar at? And every week I'm like, well, this idea of a double bottom is certainly building. Technically here, we're right at the 200-day moving average. I think you clear that kind of, 100.3, that gets you to maybe 104, 105, I think would be kind of the next area of resistance. You've had the momentum divergence. You have RSI lower high there recently. And it looks a lot like a drawn out version of what we witnessed in September of last year when the Fed came out, cut rates, yields moved higher, the dollar rallied. It's a condensed version, but that's, a similar type of playbook that we've witnessed. We'll see if we get through this level. I think you have to respect the long-term trend, which I know I have a chart of, and it's still in a secular uptrend. Now, narrowly, but you look at these retests of the secular uptrend over the years, and they've all kind of been this bottoming process, not necessarily a V-shaped recovery. The drawdowns to the uptrend these max drawdowns we witnessed in the dollar index are commensurate with what we're seeing now, call it around 13% or so. So I really am interested to see if this is a make or break moment here for the dollar index, and where the resolution is. Do we end up breaking this secular uptrend and we resume that downtrend that's been in place since January, or do we just consolidate and get back into this range that the dollar's been stuck in for a few years now?
Do you think that a break here in the dollar is good for stocks?
Yeah, I would a measured move, right? It's all about the rate of change. If we grind lower, I think good for stocks, but I think you got to look international if we start breaking this uptrend. And maybe that's the message we're getting in some of the international stocks this year, that this dollar bear story is going to continue. I mean, EM has just been on fire, and everyone attributes this to China. Oh, it's just China, but I don't think it is. When you look at,
we know it isn't, because we've
right. I mean, it's a range of different countries, and certainly China has been a big factor. I mean, I think that got the party started back in early, I can't remember now, 2024.
September, end of September 24.
We had the uninvestable hedge fund. Yeah. And it's been off to ever since it was uninvestable. I continue to think EM, if the dollar continues, the big part I'm watching, it's a little hard to see, is that EM versus S&P 500. So when you talk to, whether it's an advisor or an institutional account, you bring up EM and they basically, stop listening at that point, because they've been burned so many times trying to pick a bottom in relative strength in EM. But this has been a bottoming process that's been in place for now almost a year and a half, almost 2 years. Really watching to see if we put a new high in that relative strength. Breadth looks good. It's not just a few names. So really constructive, we'll call it, on the EM space right now.
And then this next chart, I mean, you talk about the chart of the week, chart of the day. You've had a few, pretty damn good ones. I think this next one might take the cake. Throw up that commodities chart.
Oh,
it's
yeah.
a good one.
Yeah, speaking of the dollar breaking down, you think about commodities, right? And look at this Bloomberg Commodity Index. This is we call it BCOM. There's one that actually is a little bit more, it basically factors in the negative roll. That's already breaking out. Some of these other indices outside of the Bloomberg Commodity Index, that's just the benchmark we use, have already broken out. this is a major breakout. If we get through kind of what 108, 109 on this index, I'm not going to go as far as saying super cycle in terms of commodities because oil is not participating. I find it hard to think of a super cycle with the oil market, but oil's arguably maybe finding the low end of its range here at 55. Nonetheless, I think you got to look at commodities. Some of the egg space looks really interesting, whether it's wheat, soybeans, in some of those areas. They've been beaten up, unloved, and now you're seeing some pretty big breakouts in that space and really driving this commodity market.
All right. How high is gold going?
That's the number one question I think I've had. No surprise, right? Over the last month or so, this move has just been unrelenting. I think when you look back to 2022, the bear market lows in the S&P, you compare it to the gold to the S&P, and gold has outpaced the S&P by, like, I forgot the numbers, but a wide margin, we'll call it. So you'd be better off buying gold at the start of a bull market. So that tells us that there's other things going on besides a lower dollar and falling real yields, and it's really been central bank buying, this de-dollarization trend. We don't think those trends and those macro trends are going away anytime soon. Now, parabolic uptrends, when they end badly. JC, you probably got a better way of putting that, or something catchier than that. But we broke this short-term parabolic uptrend. I'm always leery of buying kind of the first bounce. I usually use I think Martin Pring and some of the other old school technicians kind of.
Dude, that's like the second Martin Pring shout out on the show this week.
Really? Wow.
Seriously. Shout out Martin Pring.
Shout out Martin Pring. And, the 50% retracement, well, you can use the fib levels as well. It's holding there. But I wouldn't be surprised you get back down to this channel, just given the degree of overbought conditions in gold. I mean, we're talking a 32% premium to the 200-day. We go through all the different momentum metrics. But longer term, the trend is up. So wait for, I think, support to be found, and wait for momentum to give you the signal that I'm going to say all clear, because compliance probably won't let me say that, but wait for momentum to turn and then take a look at gold. Silver is another one. I think that could be a really interesting story next year. You think about central banks, and they're just hammering the buy button on buying gold. I would imagine they get a little price sensitive here at 4,000, and maybe they start looking at other products like silver. That's pretty liquid. Russia just launched a silver reserve program and announced it last year. So maybe that's a trend that's starting, and you start to think about silver. Certainly an interesting space, I think, as we look ahead to year end and into 2026.
Yeah, so two things before we let you run. Thank you so much. You've given us a lot of your time. Appreciate that. On the silver front, short interest on the SLV is the highest ever. So that's fascinating.
Yeah, I didn't know
odd
that.
A little bit to me as somebody who's, I feel like I'm numb at this point. I've seen so much. I'm like, okay. And then the other thing is that my question to you is on the duration, right? People ask me how high I think gold can go, and I'm less interested on how high it can go and more interested in for how long can it go up, right? Because historically these trends last for a decade or two, not a few years. So how do you think about the duration in addition to the amplitude?
That's a good question. I think you got to zoom out, right, and look at this gold chart from a monthly view and really understand where that trend is in relation to really the breakout that we witnessed above. I think, was it 2070 or whatever that level was. You could argue on a long-term basis, this is really just starting. And then you think about the macro trends. There's more, gold than euros in central bank reserves. 20% just past the year. You ask central bankers what with gold in their reserves, 95% are adding gold in the next year. They're de-risking from the dollar. I don't think they're just going to stop those trends. I'm not saying it's the end of the dollar or going down that road, because that's not a view we hold. But I do think there's a pretty good bid into gold, a longer term bid, and that these themes, to your point, JC, they last for years, not a few years. We're talking more secular. I think that would be my view on this gold rally.
Love it. Adam, you're the man. You are welcome here anytime you'd like, dude.
Thanks for having me.
Good to see you.
Keep in touch. Thanks, guys.
I appreciate it. All right, man. Adios. How great was that?
Like I said, I love having new guests on the show.
100%, man.
He's
You
been
know,
on my list for quite a while and never actually reached out until recently. So glad I did, because that was awesome.
dude, he's like the Grant Hill of stock market TV.
I'm not following that analogy.
If you go look at Grant Hill's first game in the NBA,
yeah,
go look at Grant Hill's first game in the NBA. His stats, let's see, what were his stats?
well,
He put up 25 points, 10 rebounds, 5 assists, and 3 blocks in his first game.
Well, Adam,
Adam kind of just did that.
Adam, I hope you stay healthy longer than Grant Hill did, because
Still in the Hall of Fame, by the way, Grant
that's
Hill.
true. Yeah. All right. It's Thursday. Before we go, let's talk to Sean and then see what he's doing in Sean land.
Oh, Shawnee baby.
What's up, boys? Hey, I'm going to throw you a wrinkle here, Spencer. I don't want to talk about what's up in Shawnee land. What I want to talk about is I want to get into JC's head a little bit.
I don't recommend doing that.
No, I know. It's a scary place. It's a scary place. But JC loves to talk about the data. We have the data, right? Only price pays. I believe in all that too. I'm on JC's team on all this stuff. However, I just gave a presentation this week to the what do they call it? The Technical Securities Analysts Association of San Francisco, and these are chartists, right? These are people who talk charts. But you know what I talked about, guys? I talked about listening to your intuition. And JC, I value your opinions. I value your data-backed, evidence-based thoughts on the market. But we've been talking for the last couple of months about how feels like there's a face-ripping rally coming into the end of the year. I'm wondering, set all the charts aside, I'm wondering what you feel, what your gut is telling you about that, given what we're seeing in Bitcoin, given what we're seeing in the asset rotation right now. What does your gut tell you? Throw the charts away. I want to know what your gut says, JC.
My gut says dispersion. My gut says there's going to be some stuff that doesn't work, and there's going to be some stuff that freaking rips in your face. And I think that the dispersion that we'll look back in January and see is going to be skewed awfully wide. That's my gut.
So it's not going to be like the rally we had in September, October, where it just seemed like everything was ripping. It's going to be select names and select spaces. Might not even be a sector. It's just going to be a wide variety of stuff. That's
September and October of what year?
Of this year.
Not everything was working. You're thinking like October of like 2023. Remember, everything was working, like those months, but not a lot of things. There was some pretty wide dispersion in October, which is part of the reason I think that continues.
Okay. So your gut's telling you it's not an everything rally. It's not just close your eyes and buy anything. It's you got to pick your spots.
Listen, you want to get in my head? Get in my head. Feel free. It's all good. This week, what have I been thinking about? I've been thinking about this Joe Fahmy-ism that I've had stuck in my head for a million years. Fahmy makes fun of me because, like, if Fahmy has to give a presentation at a conference, I can give it for him. Like, I know all his jokes, right? So, I know all these Fahmy-isms that I've seen him present for 15 years. And one of the things that Fahmy taught me was that, if you trade the averages, you're going to get average returns, right? At the end of the day, it's a market of stocks. So I want to be buying stocks that are going up in price, and I don't want to be buying the ones that are not, right? I think, Strazza, how do you feel about my gut instinct about dispersion over the coming months into the end of the year?
I think you're punting on the answer a little bit.
How so?
There's always dispersion to an extent, right?
Yeah, but I think wider than normal dispersion.
And I agree with Sean. We were just about at that point where we were calling it a throw a dart market a couple months ago, and it ended as soon as we started saying that.
Yeah, of course.
Well, September, the percentage of stocks above their 200-day on the New York Stock Exchange peaked on September the 11th.
I know it did.
Well, to your point, that was 2 months ago.
Yeah, August and September, and heading into middle of October, it was an incredible rally. It felt like everything was running. It doesn't feel that way anymore.
My gut is telling me
not.
My gut is telling me to come way off the gas, kind of preserve what the gains we've made here this year, things are looking, I think, more vulnerable than we've seen since March. And I'm just wondering, like, Sean, what is it besides Bitcoin that like has you thinking that way? Is it your trades and the feedback from your account? Because that's been a huge part of it for me.
Yeah, no, totally for me. I've had a lot of breakouts that just haven't been sticking, and just getting churned out of a lot of stuff, and it's been a struggle. It's been a struggle, and
Sean and I aren't trading all the same stocks either. It's been pretty broad, this failed breakout situation. Like you're not just trading hot stocks; you're trading healthcare. You are trading a wide variety.
I'm in a wide variety. That is damn sure.
I own a lot of biotechs.
I just bought Amgen yesterday. Am I a fool for buying that breakout on Amgen yesterday?
No, I like that. I was just looking at Amgen when our guest was on talking about genomic stocks. But JC, we can't keep just only talking about biotechs because they're the only ones.
Not at all. I was about to say my oil and gas stocks are working too.
Really?
I haven't been able to say ever. Or
not really. Like oil and gas still, we wanted to put a trade on oil and gas yesterday. They're just not triggering. Crude oil failed yesterday. Nice little coil there. Not going, not yet. I was thinking it's going to look more like heating oil soon.
This Exxon's looking pretty good, huh?
What is?
The Exxon. Schlumberger, you've been calling it out. Still looks good.
Hey, Steve, by the way.
Halliburton, look at Halliburton.
Halliburton looks fantastic. I'm long both of those.
Good, yeah.
Okay, so why are you hating?
Oh, Steve, I was just going to say, I love that you take vacation the same way I do. Well done.
Dude, we planned this vacation 3 or 4 days before we left. My margin balance has been insane for about 2.5 years, to the point where I don't want to leave my screen. Finally got it down to 0, raised some cash, and I said, let's fucking get out of here. Like,
no, what I'm saying is I love that you're on vacation, yet here you are on the screen talking with us, not doing vacation stuff. So you vacation the way I do.
We did the full day yesterday. Nice for you to do that. But, we're going to try to do it tomorrow too. But this is, I'm going to be in front of my screens.
At the end of the day, if you like something, if something makes you happy, just because you're on vacation or whatever, doesn't mean you need to stop doing that. Like if I'm on vacation, I'm still looking at charts. I like to look at charts.
Honestly, guys, there's not much. Look, swimming with the sea turtles and fucking, we saw squids this morning. We were snorkeling just before the show. There's not many things I would rather be doing in this world than trading with this view. I would right here looking at charts. I'm having the time of my life.
Are you shopping? Are you shopping for real estate or no?
No, it's not reasonable here.
Yep.
We thought about it. I've looked, like I've dabbled, but we haven't contacted anybody. You can't live here. It's not.
Strazza, who's saying live here? Just go down when you want.
Look, if I'm going to get a house like this,
I'm going to hang out. Man. In Hawaii, I had an east-facing view, and because of the time zone, I was watching the sunrise every morning as I was trading, and that was amazing. Amazing.
We got the same situation here, so it's been fun.
And also, by the way, Strazza, you are pretty close to where I got married. So shout out to the Caribbean. I got married in Antigua.
Yeah, dude,
You're
it's nuts. We're up on a hill here. It's crazy how close these islands are. The other day, we can't see it here, but we were at some, bar up on another hill, and somebody's like, "Oh, that's Puerto Rico." I'm like, "What?" But they're all just like right next to each other.
Yeah, they used to all be together at one point, believe it or not.
Science.
Crazy.
Science. Oh, do we still believe in science? That's amazing.
Hey, what's the good eats down there? Just like the typical lobster, fish. What's the story?
Conch fritters.
We've had some incredible conch fritters.
Really?
There's a little beach bar just down the hill from us. There's 2 restaurants. Other than that, we got to drive 20 minutes back to Cruz Bay. But the little beach bar down there, doing coconut shrimp, incredible, really good. But it's island food. And I'll tell you,
a lot of rice.
This isn't a place for foodies. Don't come here and expect restaurants. There's a handful, but that's not. You're here to go to the beach. Go on some hikes.
But you can be a foodie and enjoy dive bar food. There's nothing wrong with that. It doesn't have to be a 5-star resort.
Oh, I love a good dive fish shack right in the Caribbean. Those are the best.
I'll tell you what's awesome here. The beach bars are like that. Like the bars right at the beach. They make the best painkillers and fish bites, and like they got fresh mahi and stuff. Like you just eat.
By the way, in Greece, it's like that too. Like, of course, you have Athens, which is a world-class city, but you go to random islands, you go to random beach bars, and like you're eating the Yitos there on the so good. It's
a vibe too.
You know what's
Eaten by
hilarious
waves,
about these folks in the Mediterranean? They love the Caribbean. They're dying to go to the Caribbean. I'm like, bro, you're in the Mediterranean. You're good.
Yeah.
Stay here. And then people in the Caribbean want to go to, like
it's one of the most human things to do, I think, is to want or think you want something you don't know about and don't have.
Yeah.
It's just real human stuff, I think.
Right.
All right. Let's finish
Good to
up
see you,
strong
Sean.
here. What do you guys what are you putting on here? Sean, what's the trade?
What's the trade? All right. Well,
Ooh, hold on. We're going to Morgan's Mangoes tonight. Everybody says that's the spot. We're going there tonight. Thanks, CBA. Sorry.
It's a great name. I'm going to tell my wife about that.
Yeah. There's a restaurant here, Morgan's Mangoes.
well, okay, JC, what's the trade? I'll finish with a trade I put on right near the close yesterday. I like this Stoneco, STNE.
Love it. Great call.
Yes.
Right on the verge of breaking out. I might be jumping the gun a little bit, but I like this setup.
Okay, Brazil is so hot right now. I haven't told anybody this. My biggest position has been my biggest position in my account for like 2 weeks now because I got exercised on some options. Valet. This is like Brazilian metals, but the speculative growth ones, which is what Stone is.
Are you talking about VALE?
Yeah.
Oh, yeah, I'm in that too.
It's great. It's great. It just goes up every day. And I think the Pabst Blue Ribbon PBR is setting up really nice. JC, for an energy guy like you are right now, check out the PBR, dude, because it's Brazil plus energy. Really
I love
good
that you
stuff.
call
Huge
it Pabst
div.
Blue Ribbon. That's awesome.
Huge
I
div.
love
But no,
how he
Sean,
calls me the energy guy.
Sean's right. That's one of the best charts currently in this market. That's one of the best charts you're going to find. And pretty good. That's a solid name too. Like that stock has an exciting story, I would say.
Yeah,
Excellent.
Stoneco looks great.
The story is the price goes higher. That's the story.
I agree with that, and I'll raise you a new holdings there too. Check that one out.
New is sick. Breaking out.
Very similar. And then EWZ, Brazil was up 4 or 5% yesterday, making new multi-year highs because I don't know if you heard, Strazza.
Yeah.
Breadth is deteriorating and fewer stocks are going up. That's why Brazil was ripping face to new multi-year highs yesterday.
There. That's what Sean and I are trying to tell you. Yeah. It's been shit. You know. Breakouts.
Hey, I got one more trade.
Another speculative growth stock breaking out.
I got one more trade for you guys. Heading into the weekend. Bills minus 21 over the Miami Dolphins. What do you think?
Something stupid. Dude, the Dolphins are so bad. Are they going to fire that idiot?
It's long overdue.
Thank God.
Bills minus 21. Season. You heard it here.
Thank God it's basketball season.
Tua's not going to have a job next year.
I wouldn't even know what to do with myself. All right. That's all I got. Strazza, get back to your turtles. Whatever it is that you and your turtles are doing with each other, I don't want to know.
We got our call. We're hanging out. We'll be here this morning. Yeah.
All right.
It's cold where I'm at, Strazza. That's why I got the fireplace going.
That looks so lovely, Sean.
Very jealous.
You should get off of this show and go meditate right there by the fire.
The market's open, man. It's too busy to meditate right now. It's too late.
That.
Sean's basement might be the coziest place.
Yeah, look at that. Look at the art and stuff. That's just.
Yeah, come on over, guys. Come on over anytime.
Dude. Sean has like 4 different rooms. He moves from one to the next one, looking for the right vibe.
I think this is going to be my winter. This is going to be my winter hang, I think, this winter.
Yeah, hell yeah.
Very, very jealous of that. All right. Steve will be live in an hour, right, for the members of the Breakout Multiplier. Sean will be live at 3:00 for the jam session. That's what we got today. So, Gold Rush Live. Gold Rush Live at 2:00. Almost forgot about that. Jason and Sam. If you guys just need more commodities in your life, every Thursday at 2:00, Jason and Sam talking nothing but commodities and a little bit of.
We all need a little bit more commodities in our life.
All right. Thank you for watching. Smash the like. Go make some money.
Later.
Run it.